Listen up, the Dow just hit 50,000. This is a historic moment for the markets. Yes! To the moon!
Money Wolf is sponsored by Aaron Gold Group. Check them out at aarongold.net. Now, back to the show.
Good morning, good afternoon, good evening, good night, wherever you are, wherever I am. I am the Money Wolf. How are we doing out there? I hope we're doing good. Man, I tell you what, this last week, oh, what a ride. We're going to dive into it here in a second, but I tell you what, the day that I'm recording this is February 14th, which is Valentine's Day. Money Wolf got a Valentine's Day card from Mrs. Money Wolf. And I tell you what, it is a beautiful card. It's a beautiful black card with black on the outside, red on the inside. These all these raised, what do you call them, hearts and everything. And I'm going to read it here real quick. It's safe for work, so you don't have to turn the volume down or anything. It says, "To the one I love, who would have thought I could find my soulmate and my best friend all wrapped up in the same person." And then on the inside it says, "You know what I'm thinking before I say it. You know exactly what I need, even when I'm unable to see it. You know how to make me fall in love with you over and over again. Happy Valentine's Day, my love, and many, many more to come." Signed by my girlfriend. Ladies and gentlemen, I absolutely love this gal. I do. I have known her for almost 20 years. We've been together for quite a few of those years. Started off as friends. But I tell you what, if you're ever lucky enough to have a girlfriend that truly, really, truly loves you, or boyfriend, a partner. Let's just say that if you're ever able to have a partner that truly loves you, you are going to be one of the wealthiest people in the world. The reason I say that you're going to be one of the wealthiest is because if you take that and you mix it with money, you got yourself a grand slam, because behind every successful person is a partner pushing them and just really wanting them to succeed. So I just want to bring that up because it is Valentine's Day when I'm recording this. I love her deeply. I really do. On with the show. Starting on Monday, February 9th, we had a strong start to the week with tech leading the bounce. Dow hit a fresh all-time high amid the broader optimism prior week's momentum. Dow Jones closed at above 50,000. That's right, folks, 50,000. Woo-hoo! Man, I tell you what, I saw that and I'm like, oh yeah, go 50K! It just even sounds good, 50K. It was just wonderful. And of course, the S&P closed at 69, 64 that day, along with the Nasdaq closing at 23,238. All of them all up, with the tech powers gaining and markets steady after the Asian strength and investors' positions upcoming data, which was the jobs report and the CPI. The Dow continued to push above the 50,000 milestone from the prior Friday. I mean, it just, very rarely do you get to see something so cool as the Dow hit a huge marker. I mean, there's a difference between hitting 30,000, 40,000, 20,000, but you got the big markers, the 1,000, the 5,000, the 10,000, the 20,000, the 25,000, the 40,000. Now we got the 50,000. 50,000. It's just unbelievable. Money Wolf just loves it. I'm just excited. I am. So Tuesday, we go on with the extended records on the Dow for 3 straight closed days. Blue chips shine in the rotation while tech softened a little bit. Not much there going on. We had a weaker than expected retail sales data, eased some inflation concerns and boosts hope of Fed easing rates later in the year, but highlights consumer report spending softened with cynical and value rotations, favors Dow overreach on tech. And Man, I tell you what, Tuesday was a good day, so then we get into Wednesday. We had a delayed January jobs report, because of government shutdown. And stronger than expected, early rally faded into a mixed close on the flat finish with a rate cut on the pullbacks. I mean, yeah, things are looking good. The Dow hit 50K, and we were doing pretty good, on Wednesday. The January non-farm payrolls were up 130,000, which beat out the forecast of 55,000 to 70,000. Unemployment was down to 4.3%, with a initial surge of resilient economy, but that reversed as it signaled less urgent to Fed cuts, which is probably going to be delayed, pushing Treasury yields higher and pressuring growth stocks. So what we got going on here, folks, I mean, Money Wolf always likes it when we're doing good economically, but of course, when we're doing good economically, sometimes the Fed likes to sit there and not cut rates, and of course, we all know what a boost rate cuts are. And it's always that fine balance. I tell you what, if you ask me one job that I would not want, it is Fed chair. Those people, the people that are the Fed chair that have to deal with all this, those people, they know how to walk a fine line. And Money Wolf doesn't walk a fine line. He just runs straight through. I just get up going. I just start running a little bit, and then I run a little bit faster and a little bit faster. Next thing you know, I'm in a full gallop, and that's just something you can't do as Fed chair. So, if you're the Fed chair of the United States, Money Wolf appreciates you. He really does. And he knows the job that you have is hard. And don't let the naysayers get you down too much. So then we get off into Thursday with the broad sell-off. The Dow dropped below 50,000 as AI tech fears resurfaced hard. And did they resurface hard? And we didn't get down on the Dow just a little bit. That day we closed at 49,451. I mean, we dropped almost 700 points, or about 1.35%. And it just, oh man, it was bad. It just crashed. And then the S&P went down 1.6%. Nasdaq also went down. Over renewed worries of AI disruption to software profits and massive capex needs. We're also looking at the SaaScacopolis flare up. SaaS, software as a service. A lot of us don't like software as a service, and because of AI now, a lot of companies, especially the big companies, are starting to bring in internal programmers again to create custom software so that they don't have to pay for subscriptions. So we may be seeing a cutback on this subscription model here pretty soon, but that's the way business is. You find something new, sometimes it gets overextended, a new product comes out, new way of doing things. It's all about adapting. Adapt. So, I'm not going to worry about that too much. Then we got the rotation fatigue from midweek highs, with the yields still elevated from the jobs data adding pressure. And you know how it is. You get that high on Monday. We got that above 50, a good solid above 50,000, 50K. And then, of course, rally around that for a couple days, and then we realize what's going on, and boom, people come back to their senses, or they just simply decide to roll out and take money off the table, which is perfectly fine. That's the way this game is played. You go in, you go out. You go in, you go out. Even if you're a long-time investor, which I suggest and I always recommend people be. If you have a stock that you made a good amount of money on and you can take a few shares off the table and take your initial investment out so you're only playing with house money, go for it. So then that led us to Friday the 13th. Modest rebound and stabilization on cooler inflation data, but weekends and choppy with tech under pressure. Now, me personally, I like Friday the 13th. Friday the 13th has always been a lucky day for me ever since I was but this Friday the 13th was not that good. But this year, 2026, we get two more chances at it. That's right, 2026 has 3 Friday the 13th in it. It only happens once every 25, 27 years, something like that. So, we're definitely going to have an interesting year here. So we got the January CPI that came in softer than expected, easing some inflation fears and helping yields decline moderately. Provided relief, but not enough to fully reverse Thursday's damage or revive broad enthusiasm. Tech remained weighted, mostly going with AI jitters. Anytime that we're dealing with something new, as a lot of people have claimed that this is the fourth industrial revolution, you're going to have jitters. And that's just the way things are. It's been that way in the past. It's going to be that way in the future. We saw it with every major revolution that has come through with new technology. Whether it be digital technology, steam technology, railroad technology, automobile technology, it's just one of those things. So yes, there are going to be jitters, and there's going to be jitters for quite a while. I would say that there's probably going to be jitters all the way up until, I'd say probably 2030 or so. But you got to keep your eye on the ball. And I know you hear that a lot. Oh, you got to keep your eye on the ball. Then that's just like a general term. But seriously, you got to look for companies that are going to do good in an environment like this. Companies that provide the basics for it. I'm talking about companies like Intel, NVIDIA, AMD, Corning Glass, the companies that produce copper cables. GE Navora with all the stuff that they produce for power plants, Caterpillar, John Deere, anything related with construction. All this stuff has to be built out. And the companies that build it out have to buy stuff, buy supplies, and buy equipment from other companies to build these things out. And that is where the money is to be made. Remember, during the gold rush, the money was not in the gold itself being pulled out of the ground. It was in the shovels, the picks, the axes, and the jeans that were being sold to the miners. It was in the railroads getting them to the west. So you got to remember that that's where the real money is. So then we go on to the weekly wrap, and I tell you what, it was volatile all the way around, and it's just going to be that way for a while. But hey, that's okay. Because where there's volatility, there's money to be made. And you just got to keep running with the pack on that one. I'm going to start something new with this episode. I'm going to go over some stuff that's coming up in the coming week. This is new, so if you're new here, this is a new segment. If you've been with me for the first 3 episodes, because this is episode number 4 of season 1, then this will be a new segment for you, but it is something I'm trying out. We're going to see how it works and then go from there. All right, in the coming week, February 16th to the 20th, it's going to be a lighter week, kicked off with President's Day on Monday. U.S. markets will be closed, but packed with enough data to keep the narrative rolling from this week's Dow on fire, then not drama. That's right, Monday, the market is closed. We get a 3-day weekend, and which is really good because we really need to take a break, folks. We really do. We hit that 50,000, then we went below 50,000. We really do need to take a break. Money Wolf is going to take Monday off. He's going to think about the presidents that have come before our current one. He's going to think about the presidents that are going to be coming after the current one, and he's also going to be thinking about the data that is going to be coming this week. So what we got going on is Eurozone December industrial production expected to rebound after the weakness. Canada January housing starts. That's right. We got, for those of you that are into Canadian stocks, especially Canadian housing stocks, we got information coming up from last month. This gives all of us traders a breather to pull back on the week's information and stuff, and see what's going on overseas, with manufacturing signals and global growth, holding up or not, to support cynicals. That's one of the nice things about these days off that we have here in the U.S. that other countries don't, is that we get to sit back and look at their markets while we're not having to worry about ours. So take advantage of that, but don't bury your head in it. Go out, have a barbecue, have some fun. We just got done with Valentine's Day. Take your Valentine out and have a good meal. Money Wolf says, spend some money, go out and have a good meal. I mean, just that simple. If you need permission, there's your permission. And then what we're going on Tuesday, we got housing and manufacturing coming up. Empire State Manufacturing Index is coming up with an early read on the Northeast factory activity of housing building. This week's softer retail sales already flagged consumer caution with weak housing data that would echo and keep pressure up on rate-sensitive sectors. That could help the Dow's blue chip crew keep things rotating away from a bruised tech. It could, but it may not. Who knows? It really depends on how people feel after Monday. Just expect modest moves. Futures could nudge higher if housing perks up, reinforcing the economy's fine but Fed's in no hurry theme from Wednesday's job surprise. It could. Just saying it could. The meeting minutes from the January FOMC meeting will be coming out then as well, along with the housing and building permits data and the industrial production capacity utilization. Oh, Money Wolf's got a little bit of a thing going on with his lungs, so he apologizes. This week's strong jobs, 130,000 plus, with a cooler CPI dialed back to March-June cut odds. Going into Thursday, we got Fed speaker and trading. We got the Philadelphia Fed Manufacturing Index coming out with another regional gauge. And then the U.S. December trade balance with pending home sales. Building on Wednesday's theme, it could indicate persistent weakness, but if the numbers are good, things are going to be moving along just fine. We get to Friday, February 20th. We get the GDP finale, and the Q4 2025 advanced GDP drops at 2:30 on the Eastern time with the growth reports. This week's job strength already screams the economy's humming. A solid 2.5% to 3% GDP print would confirm it, potentially keeping the good news equals bad for cuts dynamic alive and camping and rebound in growth in stocks. It could. The numbers will flesh out what actually happens this next week. I mean, it's all it's going to be a real interesting surprise to see what happens this week. With light volume early in the data-heavy mid to late week, consensus is the moderate volatility. The S&P could hover near 68 to 6,900, with the Dow testing that 49,000 to 50,000 gain again. Nasdaq is still the wild card on the AI rotation, and the Nasdaq's going to be a wild card on AI for quite a while. So after the Dow's fireworks fizzled on resilient data and tech nerves, next week's FOMC minutes and GDP are the tiebreakers. This is going to be a healthy pause in a strong economy or the start of a broader rethink on rates and AI hype. And I'm going to tell you right now, Pac, everybody's being jittery with the AI. That's just something that's going to happen. I highly suggest, it's my personal opinion as Money Wolf, to stick with the AI. It's becoming a proven thing. It's becoming something that can help. One of the best things that's happening right now is the fact that companies are really starting to figure out how to use AI to augment humans rather than replace humans. And that's what it's all about. It's all about that balance between having AI help humans and AI replace humans. We don't want AI to replace humans. We want AI to help humans. It's like when the computer revolution was happening back in the 50s and 60s, where computers replaced rooms full of engineers with slide rulers. We had these people, at NASA called computers. That's all they did. They did computations. Yeah, some of those jobs aren't around anymore, but those people got placed with programming these computers and figuring out how to bring out the best of the computers to help humans. And that's what we need to focus on with AI. AI should not be there to replace humans. It should be there to augment them, to help them with the more mundane tasks of bigger projects. And there's just something that, that we'll eventually have to figure out on our own. And we will look back in history and we'll remember when the days when AI was going to take everybody's job. And then we figured out that artificial intelligence will never replace natural stupidity. And I know some of you are asking, well, what does natural stupidity have to do with anything? Some of the best ideas that have ever come out of civilization have come from stupid ideas. Either stupid ideas or failed experiments or cockamamie ways of doing something. And AI just cannot replace that. Even with this idea of going with chips that can actually reason, humans will always have something in their ability to exist that computers cannot. And we just have to learn how to make computers and artificial intelligence and humans the best combination possible so that we not only survive, but thrive. It's an interesting time to be alive, folks, and Money Wolf is glad to be here. With all that, Money Wolf is going to sign off for the week. I hope that you had a wonderful time with us today. I hope that you also had a wonderful Valentine's with your partner. If you don't have a partner and you spent Valentine's Day alone, I'm sorry. I've been there. I know it sucks, but trust me. Trust Money Wolf. There's somebody out there for you. I guarantee it, because Money Wolf is ugly. I mean, I am ugly. And yet I got one of the most beautiful women in the world to go out with me and to be with me. And she eventually fell in love with me. So just hold out some hope there. It's going to be an interesting week. Make sure you take Monday off. And remember, this coming week is Mardi Gras on Tuesday also. And then, of course, we have Ash Wednesday on Wednesday. So it is going to be a really interesting week. And with that, Money Wolf says, stay with the pack, run with the pack, let's make some money! Money, money, money! Money! Show me that sweet money! Money! And with that, have a good week!
Alright, moneymakers, that's a wrap for today. This is Money Wolf signing off. Thanks for riding along. If you enjoyed the howl, hit that subscribe button so you never miss an episode. Drop a rating or review. It really helps the pack grow. Now, all the boring details that no one really cares about. Copyright 2026, Money Wolf Media Network, and Aaron Gold Group, LLC. This program is sponsored by Aaron Gold Group, LLC. You can reach them at aarongold.net. Now, we're done.
Subscribe to the Money Wolf Podcast, your guide to financial freedom. Join the pack now.